What is up, guys? Welcome back to the channel. Today is Wednesday, March 26th, and we're going to be discussing the price of Bitcoin because there are some interesting developments on a potential breakout. In the last video on this channel, we discussed the potential of Bitcoin forming a bottom in this range. And in this video, I want to talk about the potential breakout of our long-term downtrend that stems back to December of last year. I posted this chart analysis on Twitter yesterday discussing the potential of a trend pivot incoming. Bitcoin is now challenging the long-term downtrend line, and we are sitting right next to it. Even today, there was a little bit of a rejection, but we're coming back up to it right now. And so now this uptrend line is converging with the long-term downtrend line, putting us in a potential breakout situation. Now, going back to Kraken Pro and looking at Bitcoin on the 4-hour chart, there's really not much room left in this convergence between the downtrend and the uptrend. We are pretty much right at the end point. If there was going to be a major move, it would be coming very, very soon. Moving to the daily chart, you can see Bitcoin very much perched up at the end of this convergence, ready to make a major move. The RSI on the daily has had a downtrend since November of last year, and we've broken out. We had horizontal resistance on the daily RSI, these two highs right here, right around that 50 level, and we just closed above it, I think it was yesterday. So we're getting a break above horizontal resistance on the daily RSI and the long-term downward sloping resistance. So there is a breakout now confirmed on the daily RSI. And this may be a leading indicator, a leading signal that Bitcoin may also create a breakout in the near term. The daily MACD, the bulls have the momentum as we're resting right upon resistance. This could give us reason to believe that we may see a breakout in this range here. And I was also looking at the 3-day chart. In the 3-day chart has a setup that resembles an ascending triangle using the candle body close zones. You can see we're sitting on the candle body close resistance right now on the 3-day chart, and we have an upward sloping trend. It's looking a lot like an ascending triangle, which according to classic TA is a bullish pattern. And if you want to get your target for the measured move, you go from the high to the low of the pattern and then extrapolate that onto the potential breakout zone, which is actually giving us a pretty stunning number. I mean, 98,000, I guess it's not too crazy to believe because we had this huge dump. We would basically just be regaining that lost ground from that big week down that we saw. So right now, we may just create a U-shaped recovery. That seems to be what we're setting up for now. The MACD on the 3-day chart is getting close to a cross up, and the 3-day RSI is also coming up to its resistance, questionably breaking it out right now. There is a big weekly candle body close zone at 93,500. So a more modest scenario is that we break out to 93, retest to 87, the uptrend line, before getting continuation. Moving on to the weekly chart, something else that I noticed is that the weekly RSI is also very close to a breakout. And the interesting thing about this level, right above 50, is if you mark up all of your previous weekly RSI breakout levels. So this line right here, this solid yellow line, that level that we broke out was around 53 on the weekly RSI back in October of 2023. And over here in September, we saw this breakout sitting right around 52. And currently the weekly RSI is at 51. So it's coming up to the 52, 53 level, just like the previous. I mean, it's the same exact setup. We even tested the weekly RSI support line, that this flat support right here. We came back to the same range and we're getting a break of the weekly RSI resistance, also possibly right in the same zone. And this usually leads to a major expansion phase. Obviously, back in October 2023, this led to a move from 25K all the way to 74K. And the next weekly RSI breakout over here in September of 2024 sent the market from about 60,000 to well over 108,000. So these weekly RSI breakouts are no joke. They usually yield tremendous moves in the market. And sentiment has been so bad, so down. Oftentimes, that's a great indication of a major market low. My friend Matthew Hyland made this post discussing the search terms for market crash and recession. If you go to Google Trends and you type in recession, well, you see that every major spike in the search terms, search volume for these words, is usually sitting at a major market low. So when people are very fearful, they type in recession, market crash, and the search volume spikes. And it's usually, if you bought these spikes in search volume, you could have just bought the dip when you saw the search volume increase. You would have been buying right at the major market lows. So when others are fearful, you should be greedy, right? And the sentiment recently was extremely poor, and the S&P 500 is giving us a bounce, and we'll see if we get continuation. Looks like we do have a short-term uptrend forming in the stock market here. And I know there's a lot of people that are still hanging on to their bearish sentiment, which, you know, I don't blame you at all for that. But even if we were going to go lower, I think before that, we're going to see much higher prices to the point where people are going to believe there's a full recovery, right? Just to entertain the bearish side, the bearish thesis. If this was going to be a bear market, even in a bear market, you get major rallies almost to your previous highs before continuation down. One way to figure out where that high could be is the 786 from high to low. Usually the 786 is your lower high target oftentimes. There's probably some examples in the past, like if you go to 2022, from your high to low, we bounced up to the 786 before entering this entire downtrend. So even if you're somebody that thinks, oh, it's definitely a bear market, do not discount the fact that you can get major rallies in the meantime. Personally, I don't think we're going to enter a major downtrend. The Fed has stated that they're looking to begin rate cuts this year. Also, the Fed has stated that there is no sign of a recession. The economy is currently doing well, and there is no underlying crisis. This downtrend was driven by the tariff news. Trump scaring the market, you know, doing some new different things that people really aren't familiar with, you know, getting some backlash about the tariffs from other nations, causing uncertainty. But that is not an underlying crisis, and currently the economy does not show signs of entering a recession, according to the Fed, right? So I do think a recovery is likely. Now, this is an interesting chart showing the probability of a U.S. recession. This is from the New York Fed. This was posted March 6th of this year. And the probability was actually at a pretty high point at in 2024, but has significantly dropped since then. Has gone from 0.7 in 2024 all the way down to 0.2 roughly to where, for current day. So there was a high probability, and that has now reversed. Also, Bravos research showing probability of recession calculated from the yield curve also coming down as well. So that's it for today's video. Hope you enjoyed. Be sure to smash the like button, subscribe, sign up for Kraken Pro using that link below, and I'll see you guys in the next video.